Good day, systematic traders and investors. This is Dave, and I just wanted to give you a quick update on a new strategy that we just recently released. So if you, I'll show you where you can find the strategy. If you come over to systematic-investors.com and then you venture over to the free trade ideas here on the resources menu, you can see there's two free beta strategies that were released. Now these are both of these are the same strategy, but they work on different universes. So for example, the first one works on the S&P 1500, and there's a major reason why we did that, and I'll explain that in a minute. And then there's the other one works on the Russell 3000 universe. So you can see the daily signals by clicking on the view latest daily strategy scan or view latest daily scan buttons on each. Today we don't have any buy signals just because the way the market has been behaving, but we have a lot of sell signals. So if you have some of these in your portfolio, you'll get the signal to sell the ones that need to be sold. And the same for the Russell 3000. You can see there is no buy signals for today. There are no buy signals for today. So the other thing you can do is you can have a look at the back test. So if you click on the back test for the S&P 1500, you can see what all the assumptions are. We're running 20 stocks in the portfolio, 5% per position. This started running on October the 27th, so that was just this last Tuesday. And we can look at the statistics. We can look at the equity chart. We've changed our equity charts here to be logarithmic charts so that they're based on percentage changes. So you don't see these huge spike ups like you do with linear type of charts. It's a little bit more realistic. So you can see the equity chart, looks really good. Here's the profit table. It's been positive basically every year since the year 2000. Some years are better than others. Oh, there was a negative year here back in 2008, as would be expected. So if we look at the statistics quickly, you can see that it makes about almost 13% per year and about 17% on a risk-adjusted basis because it's in the market about 73% of the time. And I won't go over all the statistics. We do that when we actually do the strategy analysis in detail, which that'll be coming out in another week or two. But you can see here the CAR MDD is about 0.93, a respectable 0.93, because the drawdown is about maximum drawdown was about 14%. So that's pretty good as far as strategies go. And the results for let's see, that was for the S&P 1500. The results for the Russell 3000, they look fairly similar. So you can see the average annual return was about 15%, risk-adjusted return almost 20%. It's in the market about 77% of the time, so a little bit more. And then you can see the CAR MDD is about 0.91 with a maximum drawdown of about 16.5%. And as far as strategies go over the course of 20 years, that's actually quite good. You can see the equity chart looks pretty good, and the profit table looks pretty good as well. Let's see, there was a negative year in 2018, 2011, and 2008, but the losses are quite small in comparison. So let's just go over to the actual strategy itself. So here's what the strategy looks like. Okay, this is what the strategy looks like, and I'm going to show you, just bear with me a second here. So I'm going to show you, I started paper testing this with a Lara Portfolio Manager. So if you have a look at this, we can see we've set up both the S&P 1500 and the Russell 3000. So both of the strategies have been set up, and you can see here it's started taking some trades already. Now, as you know, the market has been struggling pretty hard. and it's down a little bit of money. It's down about well, it's about $700, but on a percentage basis, you can see some of the trades. So what I want to do is just show you, I've started paper trading this, and you can see some of the positions are up, some of them are down, as to be expected in this market environment. But I want to show you what the strategy looks like on some of these trades. So here is, let me actually just make this bigger. So here's actually a trade that's going to stop out today. It was taken, I believe it was taken on Tuesday. So all the criteria were met, and now it's starting to go negative. So it got a signal to get out yesterday, a signal to get out yesterday, and it's actually going to sell today on the open. I'm recording this at about 9:07 on October the 30th. So this is before the market opens. So I've already kind of checked the signals, but let's take a look at some of the other trades. Like we've got for the S&P 1500, we've got some of these trades. So let's, you can actually see here, it's actually run for today, and you can see it's going to sell CASY. It's going to sell KC Market on Open. You can see it does all of that automatically in the background when you run it through Alera Portfolio Manager. So let's take a look at some of the other signals though, just to get an idea of how this system works. So the way this system works, I won't go into depth about the strategy rules because we will do that when we do our actual strategy session for members. Now, just understand this is a beta strategy. The signals are being posted in the free area of our website for the time being until it comes out of beta. This is actually a pro strategy. So once it comes out of beta and we're finished testing it, it will no longer be available as a free strategy. But for the time being, you can have a look at how it works. We're going to do this with all of our new strategies going forward so that people that are interested in looking at our strategies and our service can at least see it during the beta stage. And then if they decide they want to go further with it, they can become a member if they want. So let's take a look at some of the other signals. So you can see here, QNST is up about 4.3%. And the way this strategy works is you've got some moving averages here, and you've got like a channel, and then you've got a main sort of moving average. But within this channel, the stock has to be between the upper and lower band in order to be a candidate. So what this does is it actually finds some of the strongest moving stocks in the market, and they have to be fairly close to their highs. That's why when I flip through the charts, you'll notice that a lot of these stocks, even though the market has taken a bit of a beating actually coming into the US elections, these stocks are still quite strong. So what it's doing is it's finding the strongest stocks in the respective universes that we're trading, and it is looking for specific conditions. So I'll just summarize those conditions very, very simply. So it has to be within this channel, right? So the midline is the white line, and the cyan lines are the upper and lower bounds of the channel. It has to be within that channel so that it's not, as you can see here, like when it moves up, it's not too far extended. So it actually has to be in the buy zone. We also have a number of moving averages here going from lower to higher, and these moving averages are stacked. And what these moving averages tell you is that the market is in a pretty good uptrend. So like here you can see like they're all squeezed together. Here the market is trending. So they actually have to be from lowest to highest. They have to be stacked on top of each other. And then what we're looking for is this indicator here. This is a squeeze indicator, and what this does is it measures the relationship between the Bollinger Bands and Keltner channels. So when the Bollinger Bands, which expand widely with volatility, are contracted inside the Keltner channels, this Bollinger Band squeeze indicator will tell you that the market is actually pretty quiet. So when these dots are red, and you can see it really well here. When the dots are red, you've got a compression in volatility. So that compression in volatility just means that the Keltners, or rather the Bollinger Bands, are squeezed inside the Keltner channels, and that tells you that the market is pretty quiet and the volatility is low. Now, as you may or may not know, markets move from low volatility to periods of higher volatility. So what we're trying to capture is basically a pause in this uptrending market action, which is denoted by the squeeze. So you can see here the market moved up. Like in this instance, the market was in a squeeze and it was a low volatility period, and we returned to a higher volatility period and we resolved higher. Same thing happened here, a lower volatility period, and then it resolved higher. So that's essentially the condition we're looking for. We're looking for that low volatility period, which we're expecting to resolve into a higher volatility period with a pause in the price action and then a pop and price higher. That's essentially what we're looking for. So I'll just show you what a couple of these charts look like. A couple of the signals. You can see like the market itself. Let me just pull up the SPY. The SPY itself is pulled back quite a bit. You can see it's below its actual channel. The SPY's pulled back, and the triple Qs, the Nasdaq is pulled back quite a bit. But with some of these stocks that we're getting signals from, you can see they're actually they're still really strong, and they've held up quite well. So this stock here, PSA, is in the same scenario where you've got the setup. I think we entered this on maybe Wednesday or yesterday when the conditions were right, and you can see it's been holding up quite well. And a lot of the other stocks will be doing the same. So let's just look at WMT, same idea. So that's essentially how the strategy works. Now, we've got this strategy running for both the S&P 1500 and the Russell 3000. The reason that we did this is this strategy was actually developed as an options trading strategy. So you can actually, for stocks like the S&P 1500 universe, there's a lot of actual optionable stocks that have good liquidity, and they're good to trade with options. You can actually construct options trades around these signals. So for example, just a couple of quick examples. One, and we'll be talking about this more on the inside, but one of the things that you can do, for example, is you can set up put credit spreads. So once you get a signal, for example, you might be expecting that the market is going to move higher, it's not really going to move lower, and what you can do is maybe sell a put credit spread a little bit lower than the support area, a little bit out of the money. The other thing you can do is, and expecting that's going to move higher. The other thing you can do is you can buy in the money calls. So you can do a straight directional trade as well. So for example, when we had this situation here, you can buy a straight call and expect like a pop up in the price action. Like in this scenario here where you've got quiet activity, you buy a call option, let's say a couple of months out, the price action pops, and and you get paid. And that's essentially just an example of a couple of the options that you can wrap around this strategy. This strategy was actually designed for option trading, but it works well with stocks. So what we did is we quantified the strategy. We quantified the strategy using our normal quantified backtesting procedures. We vetted that it is actually quite a good strategy, and then what we can do is we can just trade it using a Lara Portfolio Manager here. Using a Lara Portfolio Manager here, trading straight stocks, or what we can do is kind of take a semi-discretionary approach where we're looking at the signals, we look at the charts every day, we look at the strategy scans on our website, and let's say, for example, we see QNSTA has a buy signal on a particular day. We might say, okay, yeah, we want to wrap a option strategy around this particular signal. So that was just a quick overview of this new strategy. As I mentioned, it is in beta. It's available on our website for even for free members. So you can take a look at that. You can take a look at that here on our website under resources, free daily trade ideas. These are the actual strategy scans. If you click the green buttons, they will show you the strategy scans. Now we don't have any buy signals today, just sell signals, but you can see what those look like for both the S&P 1500 and the Russell 3000. Now, if you want to understand how the back tests work for our free members, one of the things you can do is just go to where are you now? Free courses and learning tracks under resources, and you can access the free backtesting mini course. And the free backtesting mini course will take you through a very high level overview of how to read the backtest so that you kind of know what you're looking at. So I hope that helps. If you have any questions, leave a comment, send us an email. You can contact us through our contact section just under contact SIG. And I hope that helps. Let us know your thoughts on the strategy. Let us know if you have any ideas on strategies you want to develop. We'll be sending out some other strategies that we've been working on for many weeks and months, and we'll be posting that research and those strategies in upcoming sessions. And stay tuned for the in-depth strategy scan session on this strategy, where we'll go into a lot more detail on how the strategy works, trades that you can set up, scenarios, how to automate it, etc. So I hope that helps, and have a great and wonderful day.